Let's go across to Richard Harris. He's joining us on the line this morning. Richard, break it down for us. We've got, of course, Congress dithering. Trump saying he wants the economy back in play, completely, ignoring those warning bells around the coronavirus and the spread of it, while New York remains the epicenter. Meanwhile, the Fed, of course, doing its part. Richard?
Sorry, I didn't get any sound. Can you repeat that question?
Absolutely. I just wanted your sense of, what we heard overnight on Wall Street with regards to how they're trying to manage the entire situation, the stimulus, the lack of, and Trump's commentary as well on trying to get the economy back to work.
Well, I mean, the whole thing's fascinating and actually is coming through quite interesting. First of all, the Fed obviously are trying hard. They're putting a lot of money into the economy. They're not really having much impact. I think what really is going to have an impact is what the government will do. And I'm sure that Congress will come to some sort of solution today or tomorrow, which is probably why the markets are good. Now, Trump's comments were extremely interesting. The reason is that, of course, we have to get the economies back to work. And there must be a case to say that don't we have a narrative out there that complete containment, the whole population must lock down, as the UK did last night, but with a mortality rate around 1%, maximum 2%. You can kind of see that there's an argument building to say, well, is this making a lot of sense? We've done so far, maybe $25 trillion worth of damage to the global economy. And is it really worth it? So I rather suspect that maybe Trump might actually look to drive a different narrative next week or so.
Okay, Geoff Dennis also joining in. Geoff, let me get your perspective. Stimulus, no stimulus, is it making a difference? Is it having an impact? What's your view?
Well, there's no doubt, in my view, as your previous speaker said, that they will pass a bill. There's no doubt about it. I think it's a bit like TARP towards the end of 2008, it went back and forth before it finally got passed. So it will get passed because it has to get passed. It's just a matter of deciding on what the components of the bill will be. And that's very welcome because what it means is that fiscal policy is going to add to the impact of monetary policy in terms of trying to support the economy. And also, as you just said, the very interesting issue that's developing now is the suggestion from Trump that, he's shocked about how bad the news is for the economy. Well, I'm shocked that he's shocked, frankly. It was obviously going to be the case that these lockdowns were going to have a big impact on the economy. And now he's apparently trying to find a way to allow some of this to ease up because he's not going to like the economic numbers that come out of that. And that's going to be very interesting political dynamic, I think, going forward. But I think the markets are better in Asia now, after another pretty poor day on Wall Street, because I think that rightly so, the markets are assuming there will eventually be a fiscal package agreed by the U.S. Congress. I think it's a given that will happen.
Given, of course, that we'll hear on the package, but markets, at least here in India, we had the worst day ever yesterday, Geoff, in history that we saw. We don't seem to be seeing a bottom anywhere at this point. It's anyone's guess, really. When it comes to what you're seeing on Wall Street as well, you think the Fed's latest move is helping to perhaps keep markets stable at lower levels? Yesterday was again shaky, of course. But how do you see this playing out?
I think there's no doubt that what the Fed has done is going to prove over time to be very helpful. It's just that I think nearly every other commentator has argued that monetary policy will not solve this problem of this complete stop in the economy as a result of the coronavirus on its own. It's got to get help from fiscal policy. And I think we went through a phase with the Fed actions where they were so dramatic and so unexpected and so, off schedule in terms of the FOMC meetings that everybody said, what does the Fed know that we don't know for a period of time anyway? Are they really worried about the economy? But you have to do this. You have to cut rates to zero. You have to have all these various facilities to provide money, to buy up government debt, to buy up some corporate debt, to provide facilities for small businesses, etc. It's what monetary policy can do to help. But this will have a limited impact, maybe very little impact, unless it gets backed up by fiscal policy. And now the fiscal side is coming through. I think we'll all look back on this and say what the Fed did was good. They did what they could do in the conditions, but you needed support from the fiscal side, and that now appears to come through. Now, it appears to be coming through gradually. Now, none of this means the economy turns around. The only way the economy turns around right now is if all the lockdowns get removed, which seems to be unlikely at this point. But the monetary and fiscal responses that we're getting will undoubtedly help cushion the blow for the economy. And eventually, hopefully, when the virus starts to fade, however many months that is into the future, will provide the ammunition, if you like, for the economy to improve.
You know, what's your view in terms of market direction now, given the latest round of stimulus, given what we're seeing in terms of indicators? The SGX this morning looks slightly better off here in India, but also in terms of what you're tracking overseas.
Well, I think what's been interesting is the fact that overnight we saw the long bond actually move up. We saw gold move up, kind of in line with what we were expecting. You know, what we've seen in the last few days is weakened gold, weakened bonds, weakened equities. It tends to mean that people have been banging out whatever assets they hold in order to bring in cash. We know the world is very indebted, and people are in a position where they need cash. Now, that is a very dangerous situation that often leads to a market spiral downward. If we have gold moving up, if we have bonds moving up, that's an indicator that people are happy to use some of the cash in the market, or they don't have real big calls on that cash. So that's positive. Now, I think it would be too early to say that we're at any sort of bottom at the moment. I think that's only going to come if we see either a turnaround in the policy of lockdown that we have, or maybe some cure in the virus. You know, one of those two are going to do it. But certainly it's a better sign that people seem be a little bit more stabilized and are not just throwing out the baby with the bathwater and selling every asset they have to raise cash.
All right. Thank you, gentlemen, for joining us, giving us your perspective on how things stand currently.